Are we live? Yes, we're live. Good morning, good evening, good night. We are live with another Layer1Live. I've got my buddies sitting right on top, right on the bottom here. I've got Mike Finch. I've got Dmitry Chesnikov. We are going to have ourselves a good Monday. Thanks for everybody in the chat right now. We're getting started. If there's any audio issues, if there's any type of situation that you guys see and you're in the chat, please let us know as we get started here. But otherwise, we're going to have a good episode here, man. We've dropped all the links. We'll wait for some people to get in the chat, and then we'll get started. What's going on?
Yeah, not much. It's it's a beautiful day here in Pittsburgh. It was a fun weekend. Had some relaxing to do, but other than that, nothing too special. We obviously had a cool episode of Dimitri's Desk this Friday, right? Where we went over a lot of alts. Those things looks like are flourishing at the moment, so that's good to see. Yeah, it was a great episode, and looks like the market, is going further. So happy to see that.
Yeah, it's BTC seems to be coiling here. I don't know where we're going next, but it felt ready for a pop one way or another. We got some good quick news here today, some good discussion pieces. There was a lot of news this past week in crypto, so we've got a lot for everybody today.
Yeah, absolutely. We'll get to that quick news here in a second, as well as some interesting pumps that we saw over the past week or two here, so that we can kind of break those down and not tell you whether to sell, but certainly we'll give you our little thoughts there. So Pickle's in the chat here. He said, "What's up, lads?" The moon, I guess. What's going on? What's going on, Pickle? As you guys fill in the chat, we appreciate you guys stopping by. Feel free to comment, man. This is going to be one of our better Layer1Live episodes, hopefully. Before we get to all of the goodies, let me do some housekeeping per usual. Top 5 countries. We've got US, UK, Australia, Germany hop back in the top 5, and Canada is pulling up the rear at number 5. We got top 3 episodes. We're going to have that episode with Axie Infinity. We were talking about leading the second generation of NFTs with Jiho. That was a good episode. We had Galen's episode with you guys is actually doing pretty well. DeFi and the future of institutions in crypto. And then we have that third one is Ledger Prime, talking market making in crypto. I guess this week we're going to obviously have Layer 1 here. We have Dimitri's Desk on Tuesdays. We've got to fill in some of these interviews this week, but we'll keep you guys updated as we go. NFT Live is going to be on Thursday, and Dimitri's Desk, of course, on Friday again. So that's kind of the news for the week. We wanted to give some quick shout-outs here. Brandon, if you are in the channel or if you're listening afterwards, shout-out to you. You were our like lads member of the week here. You posted about your trip from, I guess, Dallas to Colorado. So that was cool to see. Hopefully you're safe on your trip. We've got winners from the Bitcoin stakes. It's been 4 weeks since we started. It looks like Zach Lee and Tomas take home the $50 BTC, so they're going to split that. Hopefully the fees don't cost more than actually what they're getting. But it looks like that's going to be our news for the week, guys. The Layer 1 community channel, the Lads channel, has been popping off this past week. Did you guys have anything else to add as far as the Lads go?
I think we had proposition to change the structure of predictions for the BTC. So I'm actually looking to vote for that, because as you can see, my performance in picking was not as good. I think it was due to the structural flaw of this contest. So I'm looking to make some changes. Maybe we can introduce some leverage later on. So to get back. If you're like really down there.
Yeah, Dimitri works on short-term time frames, so he doesn't like the 7 days. He wants it cut down to like 3 or 4 days. I guess we will give some information for those of you that have participated. We'll give you some more information on what we're doing this week for the second Bitcoin stakes that we'll be running. We'll be running those monthly. The format's going to change as it evolves. Mike, did you have anything on Bitcoin stakes?
I'm hanging in there. The leverage would be interesting, because then you could probably go negative, right? If you 2x'd it 1 week and we're sitting at it, that would be rough.
Yeah,
I like it. Though.
You would owe money right into the pool, right?
Hey, there you go.
I love that, guys. We're going to be rolling out a lot of different community features. Bitcoin Stakes is just one of them. So hopefully we can have some fun with the lads here. Dimitri didn't make it off the blocks. Mike looks like he got to, I think 1 week you did win, as well as myself.
Week,
we got and then we had myself doing 1 week. A couple others in here. The cat didn't get off the block either. So definitely a ton that need to come harder in our not second annual, but second Bitcoin Stakes. But without further ado, I think that was enough of shout outs to the lads. We appreciate you guys. Anybody that's listening here that's been listening for a long time, we appreciate you as well stopping by. So I guess without kind of further ado, we're going to go right into the breaking news. We're going to package the breaking news together. Basically, Link, Doge, and we added in Tesla here because all of those seem to be on this ridiculous hype cycle. Doge's might be more short term than the other two, but we're going to just touch on all three of these or two of these tokens and one of these stock tickers here, the Tesla company. Obviously, we're going to touch on kind of why we think they pump, but also just kind of the mania surrounding those different price actions. So I've got Doge here for the first one. I'm going to pull up the article here, and usually I'll pull up the article for you guys. We're going to try that, but this comes from the block. They're basically giving the numbers behind the Dogecoin event, right? So we had like a TikTok challenge that kind of went viral where everybody was kind of trying to get Doge to $1. So I guess that was the whole challenge. And then obviously interest spiked, Google searches spiked, the token price spiked. So I'm going to give you some numbers here. It looks like I'm reading straight from the article. As the Doge mania gripped crypto markets, trading volumes among venues supporting the crypto soared 22 times the average daily trading volume. I guess it reached the top 100 on Google Store as far as popularity goes. And it went from 730 views a day on their Wikipedia or Dogecoin's Wikipedia to about 5,700. I guess value settled on the network hit nearly yearly highs at nearly 20 million. So all of these different stats that kind of surrounded Dogecoin's ascent. Now I'll pull up the CoinGecko, price action here, but basically it looks like it almost completely retraced. I think it was at around a fourth of a penny before this kind of mania. It shot up to like almost like I guess 3/4 of a penny. I'm going to find this for you guys. But yeah, pretty crazy stuff surrounding Doge. I don't know if you guys have any thoughts on it. Let me get the article up here, or the price action, put it on 30 days. Let's see what we got. So it eventually hit, fifth and some change, half a penny and some change, all the way, from a fourth of a penny. So a ton of price action there regarding that Dogecoin pump. Did you guys have any thoughts on that?
What happened? I thought we were gonna get to the $1. That was the challenge, I was hoping to, we'd go all the way there, but
we didn't even make it to a penny.
I know, right? But I mean, it just shows you, like, I call this the sell side liquidity crisis, because when you get like a bunch of people to hype up token that is really kind of like been dead, right? And there's really not much of a resistance there in terms of the sell side, so it's kind of easy to push them around. And then also at the same time, when you see a coin like that like hyping, right, people start hopping on board to ride the train. So it kind of like self-fulfilling prophecy where the price continues to go higher just because the speculators continue to jump in because they're trying to capture that return. And they know, like, at the end, right, obviously it's going to stop, right? So it's like, but they're just in there for the momentum short term, just to flip, and that's it. Looks like that's what happened.
Yeah, I would say so. I'm surprised that Robinhood, where, the majority of these TikTokers, I think, are probably trading crypto, I'm surprised they even have Dogecoin, to be honest. Everything else kind of makes sense. You got Bitcoin, ETH. I think Bitcoin Cash is in there. But somebody mentioned on Twitter that the next cheapest coin after Dogecoin is Ethereum Classic. So something to kind of watch there. It's interesting. I mean, we've seen this crazy revenge of retail happening with stocks. Tesla is a good example, which we'll talk about next. But if for some reason it becomes easier to make a ton of money really quickly in crypto than it is in stocks, which to date really hasn't been the case, these folks move over and some of these cheaper Robinhood coins pump. So it'll be interesting, something to kind of watch as long as Bitcoin is able to maintain that 9K price.
Yeah, as we move into more social media apps like TikTok as well, it's interesting to see like the movements actually kind of working into price action on these different tokens too. Because basically what you had was kind of this big pump, and then you saw a lot of exchanges rush kind of to list, and this is crypto exchanges as well. So even though maybe Doge wasn't listed on Bitfinex before this little TikTok challenge, now it's listed on Bitfinex. So it's interesting to see kind of the long term, I guess long-term repercussions or definitely like long-term things that go along with some of these maybe short-term challenges. But other than that, we're going to hop into Tesla now. So Mike's got Tesla, and then Dimitri's going to touch on Link, which has been absolutely phenomenal over the past month. I would say probably a year. So if you were holding from the bottom on Link, congrats, man. You are doing pretty well.
Yeah, for sure. Same on Tesla. I remember at some point last year, I think it was, Tesla was at like $180. So it's about 10x that now. Most recent price I saw, I was sitting about 1,700. It's pumped for a variety of different reasons, but the main one, kind of the main fundamental reason, seems to be that Tesla has a chance of getting included into the S&P 500. Right now it's in the NASDAQ, which is mostly your tech stocks, super volatile. It's mostly gone up as of late, but being included in the S&P 500 would really naturally allow for Tesla to have a much higher ceiling, I think, than people think it might have now. So what it needs to do is it needs to have 4 straight quarters of profitability. It's coming down to the wire here. They're going to release Q2 results pretty soon, I think towards the end of this month. And that will, basically tell us whether or not Tesla's going to continue to pump or if it's going to dump like crazy. Elon's come out with some other announcements too. He's saying they're close to full autonomy, which from everybody I've talked to in the autonomous space is basically impossible at this point still. We've got another 5 to 10 years before that's the case. But point being is that Elon is just pushing. He's pushing, looking to put a ton of pressure on the shorts, which have something like $20 billion worth against Tesla's continued surge here. Some massive funds are betting against that, like Einhorn's fund and a handful of others. So a lot of people in pain right now, a lot of people absolutely killing it with Tesla, especially if you have bought since IPO. You are cashing in. So it's been pretty nuts. I mean, the joke that me and Lee were talking about was, how mad people are if they bought 1 Bitcoin versus 10 shares of Tesla at the beginning of the month. So it's pretty nuts to see what Tesla's done and what a lot of these other stocks have done over the last few months.
Yeah, absolutely. And, just to add to the Tesla piece, there was an announcement, I think, from Tesla that they actually just dropped the price for one of their cars recently, which is interesting because it's like, it kind of talks about how maybe the demand is kind of slowing down. So they're trying to stay competitive by lowering the prices. And also, if you take a look at from the valuation perspective, Tesla right now is valued like more than if you combine all these huge car manufacturers like Volkswagen, Ford, GM, and all of them together, which is kind of crazy. But yeah, those funds that are obviously betting against it are not having a good day. And I think from my perspective, you also have quite a bit of probably of retail that's trying to short as well, which is contributing to the short squeezes that eventually get, the retail side is like the weaker hands, right? Once those guys are getting pushed out, eventually that pushes the price to the stronger hands, and those stronger hands start getting pushed out slowly. And that kind of trickles into this rise in price overall. I think that's kind of the theory. But the S&P side of it is crazy. It's like kind of like, from traditional finance perspective, it's like having a token listed on Binance,
Yeah.
it gets like pumped after that, right? So it'll be interesting to see if Tesla, is obviously going to be listed on S&P and how those earnings are going to be. They're doing some creative accounting there to make sure, things are looking green,
Yeah,
but
everybody's trying to call the top for Tesla, man. It's kind of crazy. It's become like a movie on CNBC, and just it's just nuts. So I think
yeah,
also that I think the recent price surge has pushed Elon past Warren Buffett, which is
yeah.
definitely a interesting narrative as well. It kind of mirrors kind of Buffett's fall almost. So we've definitely seen an interesting kind of story develop there. But did you have anything before Link?
No, I'm ready, yeah, to jump into Link. So I've talked about just in general, like altcoins, on the Dimitri's desk on Friday. And basically with like Tesla pump and like these altcoins pumping, it's like, yeah, a lot of people could be like, oh, all right, let's jump in on the short side. They're trying to pick tops, right? And that's usually how retail operates. They like to pick tops because if they pick the top, they feel really good. And it's usually most of the time they're wrong. So it's the question of like, all right, do you want to be like right, or do you want to make money, right? So with the Link, and in alts, it's kind of the situation where you're riding the momentum, right? So the momentum's to the upside, then why the hell would you be shorting right now? Just ride the momentum to the top side, and then if things start turning around, then you'd be out of there quick, and then start picking your shorts after the trend changes. But with the Link, since obviously it's been pumping, there's a couple factors that are kind of involved there. So you have first, you have the fact that we had issues with like Uniswap and like all these protocols and delays and price feeds and so on. So a lot of these a lot of DeFi platform, like the lending and borrowing platform, switched to partner with Chainlink to be able to isolate some of the issues that they had in DeFi. So that transition did happen. We've talked to Kane from Synthetics back in the day. We talked about the issues, and we saw more and more players kind of shifting to Chainlink. Which is, essentially DeFi is, blowing up right now. And, Chainlink is definitely benefiting from that because, they've had partnerships with a lot of these platforms, DeFi platforms. So that has been, on the rise, and it's been helping Link. And also you have obviously the speculators that are getting in because they see just the token pumping. They're riding that momentum to the upside. But the problem is that there is some information right now coming out saying, well, there's a lot of movement as far as the Link goes in terms of tokens going to the exchanges. Specifically like stashes, right, that people kept that have a significant amount of Link. They're starting to hit exchanges, so it is possible that we might be at the tail end, in terms of Link continuously moving higher. There might be a correction where some of these players might be starting to cash out some of their bags, which can result in a correction overall for the Link price. And again, should you be shorting this? No, but like also you should not be buying this and holding this like without a stop loss, right? So it's like if you really want to like participate in capitalizing on this short-term momentum, you have to really be in and out in these type of things, because you never know when they're going to turn around, and once they do turn around, that thing will usually comes quick. So that is kind of my perspective on Link, and some of the other alts that have been outperforming pretty well.
Yeah, 3 months ago it was at $3.20. Now I think it topped out recently somewhere around $8.20. So definitely a good run. It's certainly alt season for some tokens, and some people are happy, assuredly. So I think as far as Link goes, it's kind of riding, like you said, on the backs of the DeFi movement, because it's claiming to connect DeFi to traditional institutions and things like this, as well as the DeFi platforms themselves. So not only connecting on-chain analytics and on-chain platforms, but also kind of merging off-chain data with on-chain. So basically, if you believe in DeFi, you believe in Link. With the amount of platforms that are integrated into kind of the Link technology and the Link platform, you're talking whether you believe in DeFi going long term, you just continue to buy spot and go long. If you think the DeFi situation is untenable, or maybe gonna backdrop, I just see Link as being one of the hardest hit if the DeFi situation kind of spirals out of control. Not that we're saying that it is going to happen, but if DeFi starts to kind of lose some steam, Chainlink definitely sees a little bit of drop off there for sure. So what do you think, Mike?
Yeah, I mean, I was talking with our buddy Jake yesterday, who has been accumulating Link for some time. So he was very happy yesterday to see this pump. I mean, to be honest, and I'll kind of pose this question to you guys, right? Other than Bitcoin or ETH, what would be a altcoin that you would hold for a year plus other than Link and feel safe and bullish and, that you would have strong potential in making gains?
Well, if I can go first, I'm gonna say it's not gonna be Cardano.
It's got to be Doge.
I don't think I would go with like something like Cardano, even though Cardano has been pumping. But to answer your question, I think I thought about this actually yesterday when I was talking to one of my buddies, and we're just talking about in general where the global situation is and kind of where like the chain analytics is for Bitcoin, right? We see right now more monitoring that's happening from the government side. We have officials that are joining the treasury team that used to work on channel analysis. So it's like a lot of things that are happening in terms of tracking Bitcoin transactions and doing things like that, where it kind of undermines the privacy. So I think, like, to answer your question, I look like a Monero, that is something that I would probably, would want to hold, knowing that the privacy overall of, like ETH and, Bitcoin in particular is going down. So I think Monero should really benefit from that, knowing that maybe some players might be shifting to that system instead of using Bitcoin.
Yeah, I'm taking. Go ahead, Mike.
I was going to say my point in asking that question would be that I think Link is pretty much the most definitive answer for me, right? Like it reminds me a lot of Ripple pre 2017, 2018 pump. You've got the Link Marines, which are kind of like the newer 2.0 version of the XRP army. But if you look at XRP back then, that was really all it had, right? I mean, there wasn't really anything strong fundamentally happening with Ripple behind the scenes. It was basically all in their settlement network, and it had and still does have a terrible reputation within the space. So you're going to get constant FUD on Ripple, and obviously we've seen that come to fruition with them constantly dumping tokens. But with Link, they check pretty much every box, right? They've got a huge following that they've had since a giant, $35 or $40 million ICO in 2017. Which isn't, one of the biggest, but is still a ton of money to have in your back pocket. Last time it pumped to $7, the team sold a ton of tokens, which dumped it back down. So they have even a larger bankroll there. Like you said, on the DeFi front, fundamentals are crushing it, right? They're pretty much the go-to price oracle for anything happening in crypto. They've got a potential partnership with China's new digital currency. And it's supposed to be used there. The only thing you can really say, which people have said for Link, is that how does the token accrue value? Which is pretty much like the same. You can say that for almost anything except for Bitcoin, right? It's very unclear as to how the token economics accrue value. So if you've been holding Link, if you've been accumulating Link, well done. I mean, they've done pretty much everything right and checked all the boxes for me.
Yeah, one of our good friends, like Mike was saying, Jake, I didn't realize he was a Link Marine, but all over Twitter the past week, he's been shilling Link nonstop. So it's interesting to see that he was accumulating that. I guess I'd go back to my main point, and maybe if I'm looking for price appreciation, I'm looking at Link. But if I think there's too much risk that it's too attached to DeFi, which was my initial point, saying that if DeFi does have this dip in usage or something happens where the DeFi kind of community or DeFi system loses steam, then Link is too tied to that. So maybe I would look at something like BNB, where you've had exchanges show kind of the ability to survive and the viability long term in the crypto space, whereas something that's attached directly to price oracles on DeFi, it's like, okay, well, if you believe in DeFi, then that makes sense. But if you think that DeFi maybe has gotten a little out of hand, maybe as every month the DeFi continues, because I think even a month ago we were talking about how maybe the viability wasn't so strong, but it seems that that bias might be going away as DeFi continues to gain more steam. So I just think that Link might be too attached to having its value on that whole entire movement. But it's a fair point. They've been making a ton of moves in the space. So I didn't want to say EOS, but nothing wrong there. We haven't seen any significant action on that token for a long time, which is interesting. I mean, Block One's essentially kind of leaving it hanging out there to dry, but we'll see what happens over the time period. But that was a great question by Mike. So we want to kind of toss that to the community, and we'll get to your questions here in a second, Renee. We appreciate all those comments. But what token would you hold long term if you're looking for price appreciation over? Did you say like a year?
Yeah, a year plus.
Year plus time period. We, other than Bitcoin and ETH, which token would you pick up and possibly predict that it would do well? So good question. Let's get to some of these questions from Renee. I think one of them had to do with Tesla that we were talking about a second ago. So he said, what's your take on Tesla being possibly involved with a blockchain energy web foundation? So I don't think, do you guys know anything about that by chance?
It sounds like a scam to me, to be honest.
Yeah.
I mean, somebody look it up, see if that makes any if that's like a viable story we can follow. Renee is talking oracles. He's saying, is it true that Zalik was supposedly coming out this year with their decentralized oracle? So we'll see. We'll see there. What do we got?
You're Zaliqua, dog.
Yeah.
Oh, you guys hate how I say that? Zilica? Sorry, guys.
I mean, you say it how you want.
Yeah, it's cool, man.
Oh, I shall.
I like it.
Yeah, so I mean, we've got I guess Zilica oracles, talking decentralized oracles. I haven't heard the story about them coming out with their decentralized oracle. Paul is talking about Cell, so maybe Celsius token would be one that you would hold long term. I would hold gold-backed stablecoins. Yeah, stablecoins make sense if you're looking to obviously not have any risk attached to what you're getting into, if you're trying to put assets into something like Mike's question was asking. But anyways, those are the kind of comments we had there. Certainly a interesting time in altcoins right now. I think we are in a mini alt season here, so it's good to see some projects doing well and some holders being rewarded for that. So without further ado, I think we've got quick news that we'll hit. Then we'll hit discussion pieces, Bitcoin, Ethereum, EOS, DeFi, and NFTs. So we certainly spent a lot of time on breaking news, more time than we usually do. Do you guys have anything before we move on all of those points that Renee made?
Let's roll.
Got? All right, well, let's roll. So Cardano is essentially releasing, and this might have to do with some of the price appreciation that we've seen with the ADA token. But Cardano is planning to release their Shelley upgrade at the end of the month in July. So they're doing a ton of things to roll out Shelley. I've got the article up here. I'll start at the beginning. But basically, Cardano is essentially looking to go to mainnet. They've got a ton of upgrades that they're pushing out and making sure that they're doing their due diligence here early in the month so that they can hit that roadmap goal of, I believe, late July. Let me see if I can find the actual date. It looks like 29th of July, they're looking to complete this upgrade with a hard fork that will take Cardano essentially live. So they've done a ton of things, obviously, to kind of gear up for this. They're looking at supply chain and DeFi, as that is probably a lucrative area to get into if you are a protocol. But it looks like via this article, and you can find it in the description, they are planning to release Shelley at the end of July, the July 29th. So we'll see if it goes live on mainnet, but that's essentially what we've got for Cardano. That might be, again, one of the reasonings behind the price doing so well and them rolling out mainnet. So,
yeah, for sure. I've got two pieces of quick news here. One has been some drama again surrounding Coinbase and their blockchain analytics software. So, little context: they bought a company, I think last year or so, that Brian Armstrong admitted in a tweet was a terrible acquisition process, because it came out that this blockchain analytics company and this software that was acquired by Coinbase was basically being used in a very kind of pro-government way. I don't remember a lot of the details, but it was basically a giant disaster after Coinbase announced the acquisition. And now the block has reported that basically Coinbase is selling this software to the U.S. Secret Service. Now, I think kind of the immediate like headline reaction for most people in crypto is, Coinbase is selling my data. Brian Armstrong came out with a tweet thread that I think cleared up quite a bit. Basically what he said, and in summary, that is interesting is and true, I think, is that Coinbase sits in the middle of kind of your anon crypto community, right? A very privacy focused, privacy oriented community, and obviously the traditional financial world. They move a ton of volume in crypto and are obviously, being a US based company, and really just any company in the world that sells something, they're subject to very stringent AML and KYC requirements. So they have to both at the same time continue to build their brand in the privacy oriented crypto space, while also following all of the necessary rules that the government makes you follow, and trying to kind of build out these relationships. So I wouldn't be too worried about Coinbase selling your data. I think they're not really too concerned about that. I think more of the concern is around their platform being used for terrorists or other people doing illegal activity, because that then very much threatens their business when it comes to regulators. So I think this is just an attempt for Coinbase to kind of continue to build relationships with regulatory authorities. It definitely hurts their brand. More and more people are going to be shitting on Coinbase, which is always going to give Binance and some of these other, maybe your Robinhoods, right? Some of these folks more opportunities to kind of step into the shoes that Coinbase has filled over the last few years as really the main mobile-based place to buy Bitcoin and a variety of other crypto assets. So some interesting news there. Lots of comments to kind of roll through if you want on that topic. Final piece I have here is a quick one. We had a really interesting team called Orchid come on the podcast a handful of months ago. They have seen a little bit of some price action on their app store listing. So they're running essentially like a decentralized VPN service, and they've continued to grow. They've got a really impressive team, bunch of backers. So congrats to those folks on that listing.
Yeah, absolutely. That OXT token we talked about with, I believe, Dr. Stephen Waterhouse, if I'm not mistaken. But yeah, Orchid was definitely a good platform. The VPN service that kind of provides, I guess, tokens based on, nodes helping power that network. Definitely a definitely good use case there, and good to see them rolling out their application. So we've got one last piece of quick news. Definitely a lot of chatter going on about your question, Mike, and we'll get to it in a second. I think we definitely have EOS supporters in the channel. Obviously, we knew that already, but we look to be peaking up here around 25. So we appreciate you guys stopping by. We're talking, weekly crypto news. If you are in the channel already, go ahead and like that video, man. We appreciate your support. It really helps kind of work the video into the YouTube algorithm, as well as if you are here for the first time, subscribe to the channel. We're bringing you all the goodies from the crypto universe, crypto landscape, if you will. We're going to finish up with quick news here, and then we're going to dive into discussion.
Yep. So I have the last piece here. So speaking of those companies that, struggling to work with regulators, here's the one way they get punished. So basically, there is this platform called Aave that essentially started providing synthetic exposure to U.S. stocks. It's one of those like typical stories where you have a platform where it's like, well, we have these synthetic products, you can get exposure to U.S. stocks, especially if the stocks are blowing up. That's a lot of interest that they're trying to capitalize on. What happened was, the regulators from US CFTC came out saying, hey, listen, well, you can't do that by, offering US clients to be able to gain exposure without being regulated, obviously, with having licenses and not go through the actual exchange. So Abra was like, okay, that's fine. We're just going to shut it down for now. They came back and they've offered the same product to the non-US basically clients. So it's like non-US clients can get exposure to US stock market. But their people were still like majority of their people were still working in the US, where they were designing products and doing some hedging stuff, floating things, on the back end. So the majority of business was still done in the US. Then finally, CFTC came down saying, "Hey, listen, you're gonna have to pay some fines." So they got fined in total 300,000 for violating this. And the interesting part though is that after they got fined by the CFTC, um, they in May 2020, Abra received 5 million from the Stella Development Foundation. Um, so Abra is not doing too bad, even though they did violate some laws. It looks like they did get some capital infusion, to continue to operate further. But I'm sure, Abra probably did some, additional changes to be able to continue to operate and without, continuing to kind of piss off CFTC, because we all know that CME runs a pretty tight ship there, in terms of how you can operate and offer these type of products, because obviously it kind of takes away some, market from them. I mean, not too significantly, but still, you have to comply with the laws and so on, right? So,
Yeah,
But
I was surprised
Go ahead, Mike.
surprised to see that from Abra. Abra's pretty pretty legit. Bill Barheit over there started it, and kind of surprising. Maybe they were kind of dipping their toes in, and it sounds like kind of they were maybe resting on a legal opinion that when it came down to it, it didn't work out. But Abra's pretty legit. They do some pretty cool stuff behind the scenes with their app. Hopefully, they're doing well.
Where are these guys based? Do we know?
It's like mostly California.
Okay.
well, yeah, but it's like they say they move the operations to Philippines, which is in regards to what like CFTC, the first warning from CFTC. But yeah, mainly like the other operations where they do like hedging and product development and like other things in the background, that's in Cali. Yeah,
Got
that
it.
was
Okay.
the main concern that
Ye-
regulators had.
Yeah, I was definitely interested to. Speaking of synthetic assets, we did have a question about synthetics, and it does beg the question if this kind of lays the foundation to go after other platforms that are offering synthetic assets. Definitely, we've been talking about the SEC and Kane for a little while here, so it will be interesting to see if that kind of lays any type of foundation of going to some other platforms and saying, hey, you're offering these synthetic assets to U.S. citizens. So a ton of questions, guys. We're going to get to some of these here in a second. I'm going to move the old column here, the old column pointer, to discussion. In the meantime, let's have a discussion on some of these tokens that were brought to our attention, because Mike asked that question early on. What token would you hold other than Bitcoin and Ethereum for the long term, maybe over a year and a half's time period, and expect to do well over that period? So we've got some mentions of EOS. We've got some mentions of companies using EOS IO tech. So we've got DApp talking about interoperability. Obviously, the DApp network's definitely got a good team behind them. I think they're doing certain things that are close to what Link is trying to do, if I'm not mistaken. But you guys can give me some schooling there. We've got some other things. We've got EOS talking about EOS Next. We've got Nudex, so definitely some decentralized exchanges there. EOS software. So we've got just a bunch of different
Basically
EOS
all
questions.
EOS.
Yeah. Definitely. And then we've got a question there at the end, Renee, asking, in your opinion, is synthetics still a good buy? So while I move this column over and we get ready for discussion, what do you guys have to think about those comments that we just laid out there?
Well, we
go ahead.
we never say whether something's a good buy or not. Not just
Clearly.
because we don't know, but because we don't offer financial advice. I don't know. I mean, for me, I haven't bought any DeFi just because of a lot of the regulatory hurdles that it has to overcome, and because I think it's kind of still more focused on like being a speculator's paradise than it is actually like kind of banking the unbanked or financing the unfinanced. So I'm kind of the wrong one to ask there. I guess I haven't jumped into DeFi. I've jumped into more of kind of the centralized DeFi or the DEXs, your hybrid DEXs, but not any of the hardcore DeFi stuff. What do you think, Dean?
Yeah, I mean, I agree with the DeFi stuff that you mentioned. That it's a little bit too risky to get into. the approach that I have with these type of momentums that we have, DeFi is obviously very experimental stages, and they're taking a lot of risk and rolling out new products. We're gonna talk about some products a little bit later on the episode that are kind of like raising an eyebrow in terms of things are gonna start unwinding. So I think the best way to play these type of trends is just in the short term. So like just getting in and out based on price action and riding that train for now, but be very cautious and have tight risk management in place because once that train is going to start turning around, you don't want to be holding that back because how many people like ended up buying like tokens last like previous like alt seasons and ended up holding those bags, and they're waiting for the price to return to break even. It's like you don't want to be that guy.
Yeah, for sure. We've got a 75 cents in late April for synthetics, obviously after that huge dip in that March event. And then right up to about a couple days ago, I believe, or last Thursday, it kind of peaked out around, I believe it passed $3 for a little bit, so definitely, I mean, if you believe in the DeFi space, again, not investment advice, we don't offer that, but if you believe in the DeFi space, Kane and that team at Synthetics is completely, like another one would be Aave, who we'll talk about here in a second, but Aave is pumping out a ton of different features. Probably like literally every month they're pumping out different features, which along with Aave Synthetics is doing. So certainly you got to find good projects within that sector, and Synthetics is definitely one of them. So I guess it depends on your time frame, but if you believe in DeFi, Synthetics is certainly something that isn't a bad buy whatsoever. So any comments as we went to go on? So again, ton of EOS comments, guys. I pepper these guys with EOS content all day. So I think they're a little kind of drowned on EOS content when it comes to you guys commenting on it. But I'd love to get your guys' take on the idea that a protocol. Like, are you investing in protocol? Or are you investing in the dApps on the protocol or some type of application on the protocol? So I guess. Are you investing in Ethereum when a lot of platforms and a lot of these projects are being built on it, or are you trying to find the applications and the application tokens that are being built on Ethereum? Which way are you going here? Because that's essentially what they're getting at, right? That maybe they're not investing in EOS, but you see a ton of different tokens there. You see the dApp token, Vigor, Checks, which is that Chintai Exchange, Nudex token. All of these are just different applications that are being built within the Ethereum or the EOS ecosystem. So what's your take there? Are you investing in the big protocol, or are you investing in the applications that are building on top?
It's a good question. Yeah, it's a good question. I think when it comes to the protocols, unless a protocol is able to actually make any progress against ETH's network effect, yes, ETH can't scale, blah, blah, blah. They're working on this. We're about to talk about how ETH 2.0 phase 0 is most likely not going to go live until the end of the year 2021. All of these roadblocks keep happening for ETH, yet no one can really take advantage, right? Even some of the more popular projects over the last 18 months, like your Tezos and your Cosmos and some of these, haven't really been able to put ETH in any sort of danger when it comes to losing market share around a smart contract platform, right? Those aren't the main kind of selling points for a Tezos or a Chainlink or some of these necessarily, but until that happens, it's hard for me to go back and look at protocols that have already launched and had some success and some failure and say like, oh, well, now all of a sudden because of this, it's going to do well. So when it comes to protocols, I'm looking at new protocols, that have probably more of a focus on use case than they do even tech at this point, because it's been pretty clear that people don't really care about tech. They really care about the use case. And if you can solve the use case problem, then there will be a ton of support and a ton of money to solve the tech piece versus solving the tech piece and having nobody using it. And it's like, okay, well, you've solved the tech and you haven't been able to get users. So like what's next, right? It's a tough step. With dApps, any dApps, any applications, I think you got to focus on ETH. That's where all of the users are. That's where all the devs are. So that's how I would kind of break it down conceptually in my mind.
Yeah, I like that breakdown. From my perspective, I'm more, of just a short-term trading perspective. So like, I would look for a narrative of something that's essentially is getting pushed by speculators, because we all know that speculators pretty much run this market at the moment. And I've talked about the use, like on the desk, it's like, what are the use cases of certain like networks or protocols? It's like, well, I don't really care. A lot of people are probably the same way. They just see the token. All right, this is moving up. All right, cool. I'm going to jump into it. Right. So the speculators are running the game, which there's, essentially there's those that speculating that there will be a use case, and that use case and users will, use the function of the token or whatnot. Which is, that is a certain amount of the valuation of that token. But then the speculators outrun that, and they, amplify that effect. And that's what matters to me, is to see how the speculators are they pushing the momentum higher and higher. And I'm just hopping into that momentum to capitalize on those returns in the short term. So for me, I really, wouldn't, like, we can speculate about the use cases and like the users and all these things, but like Mike said, it's like, well, a lot of these protocols have like the infrastructure and tech built, but that's like, well, what is the use cases? It's like nobody's really like doing anything. It's right now it's just pure speculation.
I think to Mike's point, there's definitely a ton of protocols that have the technology to outpace Ethereum, but without that community, it's going to be tough. And I want to kind of push back a little bit on your idea of kind of looking at the new protocols. And what I mean by that is when you have these established protocols that maybe have some semblance of a community, they might have a better chance than do so these like absolutely new protocols. So when you say you're kind of looking at new protocols, isn't the chance that those new protocols have to kind of gain any sort of market share even less than that of maybe ones that are already established?
Well, to answer your question, I mean, and to Dimitri's point, crypto to date has really been a speculator's paradise, right? Like even with Bitcoin, the 95+% of the use case of crypto is speculation. So if you've had a protocol that's been out for a year or 2 years or 3 years, and they've sold all this potential and pumped or not pumped yet, whatever, right? I mean, it's hard to come out with a new storyline or a new use case when the first storyline or storylines hasn't worked out, and pump it there versus a new protocol who no one's seen yet, that comes out and sells all this potential and says, hey, this is our plan. These are the things we want to execute on or have executed on. That's really what it comes down to, I think, is in, through the lens of a speculator's paradise, what is easier to sell? What's the narrative that more people are going to follow? And I think that's why it's always easier to start fresh with something new versus something that hasn't checked those boxes already.
Yeah, I think there's a lot of developments. I think we keep going back to EOS, obviously, because the community has been chatting about it. But I think there's definitely a ton of projects and a ton of things being built on EOS.io. I think that there's like way more of a community than people think. But I do like putting on my tinfoil hat here. I think when, first non-tinfoil hat, I think EOS kind of hurt itself by being one of the first movers in kind of decentralized governance, if that makes any sense, where you kind of had this top 21 of block producers. I think it might have hurt itself with the Chinese community, but also kind of the broad-based kind of crypto community kind of looking at its birth, essentially, and all the kind of growing pains that go along with birthing a new protocol. But I do think in putting on my tinfoil hat, some of the blowback from the Ethereum community, and as you guys have said here yourselves, Ethereum has the biggest community in crypto. Couldn't some of that blowback be almost Ethereum, users kind of defending their own protocol? And the fact that they are the biggest community in crypto, couldn't that make what they're saying even more heard than maybe when you're trying to attack or your closest competitor is another DeFi, someone trying to build a DeFi protocol? Do you think that EOS maybe got hurt because of the Ethereum community being so loud?
I don't know. It's hard to say. I mean, should we hit some of this discussion here? Do you want to? I don't really know what the question is, I guess.
Yeah, I guess the question I just laid out for you was, do you think EOS kind of gets hit with a lot of FUD because the Ethereum community is so large? And obviously it being a closest competitor to Ethereum, do you think that it gets a lot of I wouldn't call it FUD because a lot of it is warranted, but some information that's put out there because the Ethereum community is so large and it being the closest competitor to Ethereum at this point, do you think at all it gets hit with more coverage of maybe its downsides and therefore, kind of gets hit in the eyes of, if not even outside of Ethereum, kind of the crypto community as a whole?
So does EOS get more FUD than other protocols, basically?
Because the Ethereum community is so large. Like if you're an Ethereum,
I don't think they're really related, but I mean, like ETH shits on everybody, right? If somebody's an ETH maximalist, right, they probably shit on Bitcoin more than anything else. I think EOS takes a lot of flack. Cardano takes a lot of flack. People have been shitting on Chainlink a lot this week for not really having any viable kind of reason for the pump happening. But at the end of the day, the pumps happened.
They're just they didn't get in. That's why.
Yeah, yeah. I mean,
yeah. It seems to me like an ETH maximalist talking about Bitcoin is like apples to oranges a little bit. And the fact that Cardano is getting any heat from the ETH community makes sense since Cardano isn't even launched. I think EOS has a lot of problems that it needs to get through, but they are building, and I think they get some more unnecessary, flack than they should. And I think that has to do with them being one of the biggest competitors to ETH at the time. So we'll see. I mean, there's a ton of different projects that are building. Will it be successful? Or does EOS just suck, like Paul's saying? We'll see as it goes on, man. I definitely want to. Obviously, we're closely following this project. So without further ado, we moved the discussion column here a second ago, but we had our own little mini discussion there. ETH 2.0, in some news this past week, is delaying the launch of its upgrade, essentially. So in a post on Reddit, which I'll kind of link here, there was a post by... Let me make sure I'm saying the guys, or I have the guy's right name. Justin Drake. He's obviously been tasked with leading this Ethereum 2.0 upgrade. It was essentially an AMA, and they came out, and I'm going to link it here, and said that they are pushing possibly for like a January 1st or early January launch date in 2021. So basically, if I had to break it down here, the public testnet needs to be running on multiple clients for them to actually move it to the next stage and mainnet. This is kind of a big little thread here for me to kind of show you guys, so I'm going to put that down. But essentially what's happening here, guys, is Vitalik wants to move a little bit quicker. He says that maybe it could be launched on 2 clients before getting pushed to mainnet, and Justin Drake is saying that he'd rather it be launched on 3 to 4 clients before they actually move to mainnet. So Vitalik wants this done on a more, I guess, quick basis, a more kind of fly as you go basis, and there's people who are essentially more conservative, Justin Drake included, who are saying, hey, we need to actually go to 3 to 4 clients so that in case there's any bugs in 1 to 2, that it doesn't completely jeopardize the security and the upgrading that's happening on Ethereum. So there are definitely a lot of memes out there that one can get to. I think one of my favorite memes that happened on crypto Twitter was we're going to get ETH 3.0 before we get ETH 2.0. So that is definitely one to keep track of. If you want to take a look at the AMA, Vitalik's in that thread, Justin Drake's in that thread. There's a lot from the Ethereum community are in that thread, so it's definitely one to check out. But we've got another delay, and certainly the community is not going to be happy. It like you're saying, is going to be an opportunity for some of these other protocols to kind of take advantage of the scalability issue. If we continue to see volumes increase, we've seen gas spikes, not any type of sustained gas prices that would push anybody out, but there's certainly been a growing rumbling of people saying, hey, I cannot use the network right now because of the gas prices. It doesn't make sense for smaller transactions. NFTs are certainly hit when you're talking about small items that are worth minimal amounts of dollars, as opposed to maybe a DeFi transaction that's holding thousands. So definitely a ton to get to here with the ETH 2.0 upgrade, but it looks like that move to phase 0 with ETH 2.0 is going to get delayed to early 2021 and possibly beyond. We'll see what happens. What do you guys think?
Well, I mean, I don't want to say I predicted this was going to happen, but when ETH 2.0 was set to release this year, my main concern was it's just like, well, the ETH overall ecosystem has grown so much with like the DeFi, the stable coins, the everything that's in there. There's so many different sectors that have grown quite a bit, and working, basically by utilizing Ethereum network. That when you're doing significant upgrades, you really have to take your time. And then figure out how you're gonna deploy this without disrupting any of those sectors, and potentially causing a lot of damage to the market. So really, you really have to be super cautious when you're doing this, because you really have one try to do this, right? And then if it goes wrong, then it can really be pretty bad. And kind of the Ethereum, when they're trying to design this new release, it's interesting because I wonder what they're thinking about if they see certain sectors like DeFi, for example, continues to expand, do different things in different ways, which doesn't impact their design overall, and maybe cause the delay where they're like, okay, we have to adapt to the new things we see right now in different sectors. Therefore, we have to patch them up and have a different approach. So it's kind of like in a way where it's like, well, Ethereum sectors are growing and they're introducing new things that the new ETH 2.0 has to address before the release and has to be tested. So it's kind of like they're trying to play catch up as the overall Ethereum sectors are growing. So I think it's a good thing to have it delayed, because that just shows the fact that they're taking this very serious, and they want to make sure that the launch and everything is going to be as smooth as possible. We obviously don't know, because it's at the end of the day, you can think it's a perfect scenario, but you always have to have contingency plans if things go wrong. And when you think it's perfect, it's usually not until you release it to the market. So I think overall, like it's a good thing to have it delayed. It just shows them that they're taking it very serious.
Yeah, for sure. It's a giant upgrade. It has multiple phases, right? This is just phase 0, which is kind of the first phase of ETH 2.0. I'm okay with it, right? I think it harms the 2020 crazy bull case, maybe even the 2021 crazy bull case, if they can't launch in Q1 of 2021 for crypto as a whole. I think Bitcoin's done a really good job of getting to a point with your more traditional investors where they understand what the use case is for Bitcoin. Even I think it was JP Morgan came out and was like, hey, Bitcoin survived March, and therefore that's a huge positive for it, right? It didn't go to zero, although it almost, it got close kind of deal. So, I would say that probably 80 to 90% of your more traditional investor types have an understanding of what Bitcoin is, maybe not necessarily how it works, but at least, what's kind of the reasoning behind it, right? What's the use case? Why is it here? Maybe they start to think about it like a hedge. But when you would ask them about Ethereum, it might be kind of where Bitcoin sat 2 years ago, where they're like, oh yeah, I've heard of it. I don't really know what it does. I know it's a crypto, as I've heard time and time again. But I think that most of those folks haven't really kind of done the deeper dive. And ETH 2.0 switching to a phase 0 is kind of the most bullish fundamental event ETH has ever had. I guess it all comes down to timing, right? If Bitcoin can continue to mature and ETH can do the things that they need to do to launch 2.0 and phase 0 smoothly, as long as the market isn't just completely recoiling and we have some terrible fundamental event, then, I don't think in the long story of ETH or of crypto, a 6-month additional delay is going to hurt it too bad, because I think that gives more and more time for the hype about 2.0 and these more traditional big money investors to say, oh, okay, what is this staking, right? How does this work? I can earn money on my investment, right? Like, is this, they start to kind of quantify it as a dividend and, build out some sort of kind of discounted cash flow model. And it's more time for DeFi to evolve too. So, clearly there's some hurdles going on behind the scenes, but I don't think a further delay after so many delays already is going to be something that really kind of cripples ETH at this point.
Yeah, definitely. And I just want to point out that within this article, we had said Vitalik kind of pushed back against Justin here. And he said, for just in case you guys were wondering, I personally quite disagree with this and would favor launching phase 0 significantly before that date, regardless of level of readiness. So it seems like there's a little bit of a debate going on even within kind of the ETH Foundation and the guys responsible for pushing this forward. So, ETH has seen a little bit of growth, but definitely not over, as we've seen this DeFi craze, as we've seen the altcoin craze. ETH has not gone along with that. So maybe the market's kind of feeling ETH 2.0 out, maybe. So you definitely did not see a dump when this news happened. So I think for the long period of time, I do agree with you that they should be careful with not having a black swan event happen to ETH as they look to upgrade. Certainly, I think another thing to point out, which we can get to in the comments, because we've had a ton of comments as we started talking on this discussion piece. The gas fees, there's a little bit of a debate going on, because you're right. Like I'm going to my gas fees right now. If I had to send something, it's minimal amount of money. But what you have seen is kind of a spike in gas fees. So sometimes you'll sit there trying to make a transaction and it will go to $5, $6, $7, $8 if you catch it at the wrong time, right? Like there's spikes in gas fees that have happened on the Ethereum ecosystem where I've been like, I'm not going to transact. It's one of the reasons DAOs are having issues right now, because when you try to get people to actively participate in your DAO, certainly there's no money changing hands or anything like that. They're just voting on different, different proposals. You don't want that proposal to cost somebody $5, so that's going to be a significant friction point for them to participate in a DAO. So NFTs, I think, have to go through this as well. I think you'll see a lot of NFTs move to off-chain transactions. When you're dealing with things that are 50 cents, an item that maybe has a plethora within an NFT space, you'll see a ton of these NFT projects start to announce that they're going to do a significant portion of their items off-chain, and then maybe super rare items on-chain. So there's a ton of things that go into this, man, and a ton of, obviously we've talked about ETH and the vibrant ecosystem that it has. So many things that are tied to this ETH 2.0 and just the upgrade in general. So great points. Before we move on, did you guys see any comments in there that we can get to? I always have a tough time when there's a blow up of comments that we like 20 comments worth. Definitely one of the things I'll talk about while you guys look at that. We've made a conscious decision on Layer 1 to not be any chain focused. We're blockchain agnostic, as we like to say. So there's going to definitely be a ton of people that join the community and are part of Layer 1 and are listening right now that are part of different projects, which I think doesn't exist in a lot of communities in crypto right now. So we definitely have to traverse the idea that we can all be here and not be religious fanatics and kind of kill each other over the different situations that kind of pop up within crypto. So it's something that we have to get through. Hopefully we can all discuss, I wouldn't call it politely. You don't need to be polite in our chat by any means, but you definitely, we want to get to the bottom of, the facts around this stuff and maybe leave the religious zealotry to the side a bit. But anyways, did you guys see any comments there?
Yeah, there's quite a bit of comments, just members just talking between each other. So just kind of talking about different networks and EOS and Ethereum comparisons. So I think we should be good to move along to the next piece of discussion.
Okay. Cool. Yeah, we definitely had one piece about Reddit. I think there's a kind of a Reddit scaling challenge that's going on right now. So we talked about Reddit obviously rolling out some community points on Ethereum. So that's definitely a point to get to as we move along. But other than that, we'll definitely move on and touch on those comments next.
Oh yeah, discussion piece here from me is around some of the IPO news that we've seen. So I think this will be an interesting narrative or kind of wave as crypto moves into the IPO realm over the next few years here. Coinbase is the first really making the most major announcement. BlockFi is kind of tagging along there. Coinbase is looking to do it ASAP, basically, which I think is smart. If you can launch an IPO right now, I would imagine, especially as like a Coinbase type, right, with a pretty strong brand, strong face in the crypto space, you could see them having a ton of success with an IPO and all the kind of frothing at the mouth happening in the stock market. BlockFi is aiming for about 2021, but needs to do some work as well. need to hire kind of a CFO type, basically somebody I would imagine who has done this for a company before and has the relationships and can kind of leverage their experience there. So BlockFi sounds like they're a bit further away than Coinbase. But my question to you guys is, kind of around some of the discussion that we've seen on Twitter after these announcements came out. And the general sentiment has been that, hey, Coinbase IPO, BlockFi IPO, this is going to be huge for crypto. It's going to raise, the prices of Bitcoin are going to skyrocket because of this. And I guess, my question really becomes a question of hype versus kind of fundamentals, right? Which is always the case, whether it's equities or crypto, right? I think the argument around crypto prices pumping on a crypto company listing on an NYSE or something is that it will bring more attention to the crypto space, and people will see, oh man, look, Coinbase is a $10 billion company. It's got all this upside. You know what? Let me just take down some of the underlying asset as well, right? In the same way that people will buy gold miners, but also buy gold as well, or buy oil companies, but also get some exposure to oil as well. In kind of the same way that you could argue Bitcoin is a commodity, and then Coinbase is more of that underlying third party or company behind it. So that's kind of the hype, argument. Whereas the more fundamental price argument is, well, by offering a third party, right, by offering the company that sells the picks and the shovels to this speculator's paradise, it allows people to get much safer exposure, much less volatile exposure to a long-standing company in the industry that won't necessarily turn into exposure to, or prices increasing on the underlying assets like a Bitcoin or an ETH, because this is the new vehicle for folks to get exposure to crypto's growth, right? I mean, Coinbase as an exchange, when more people are buying Bitcoin and ETH, especially on the retail side, Coinbase's revenues, their profits, they're going to go up, right? They take huge fees. So the more action you have there, the better it is for that company. So that's my question to you guys, right? Would these IPOs kind of net be positive, neutral, or negative for the underlying crypto prices, be it Bitcoin or otherwise?
I can jump in first. So, you covered quite a bit there. I was hoping you don't mention certain things, so I can say them. but great minds think alike. So, I think in general it's kind of like a neutral side of it, because like you've explained, I think it's just a beautiful tool that will be offered to people that want to gain exposure to a company that's involved in crypto without actually exposing themselves to crypto. And the beautiful thing about it is, like, you can actually look at something similar right now, which is kind of not to the same extent as Coinbase, but you can look at like Overstock, with T0 situation, where it's like, well, you could kind of pick up Overstock, and say that they're kind of involved in crypto, and Overstock has been actually moving higher. So that gives you kind of indirect exposure to some of the crypto hype. But I think, in general, it just when you mentioned about selling the shovels, right? I think it's a great tool for traders to get in to like capitalize on the speculation in this market. Where, all right, if the Bitcoin goes up, right, Coinbase is going to make money. Therefore, it's going to translate into their shares going higher. But if Bitcoin goes down, you can say that actually Coinbase will also make money, because they make money if it goes up or down on the fees, right? So basically, you're neutral in terms of what the market of Bitcoin should do. So in that case, you're just basically selling the shovel, and it's like during the time when there's a gold rush. So it's a great exposure for the investors to do that, where they don't have to expose themselves specifically to a single asset like Bitcoin, and hope on that that the narrative of the inflation hedge is in fact correct. You're just basically selling, you're buying a piece of company that sells the tools for those speculators. So I think that's the way it should be interpreted, and there's obviously no better time for them to do it now, because the way the stocks are behaving now, and it's like a very good environment. You talked about Mike, some time ago about how, like, if all these crypto companies start going IPOing, and that's going to push the market even higher, like, if we start having like a group of crypto companies starting to IPO and bring more hype to the stock market, more than there is already now. So that's kind of my opinion about it. I think it's neutral.
Yeah, as long as it's handled correctly, and Coinbase does, I think they've shown up to this point that they can be a competent company. Obviously, within the crypto community, they've taken some reputation hits, but I don't think anyone outside of crypto is caring that there's. Although maybe within the last couple of years, people are caring more about their data privacy and things like that. So I think the things that Coinbase has been doing over the past year or two, I don't think the outside community will care as much, and therefore I agree with you guys, right? Like this I think is a positive, but also has the potential, if people kind of YOLO in and it doesn't do well because maybe the price of Bitcoin goes down and the interest in Bitcoin goes down, and then you have volumes going down. I think it's definitely I think it's a good thing, but also could be seen as neutral. I don't see how anyone could view this as kind of a negative for crypto in general. So definitely good to see more companies. I think BlockFi is an interesting one as well that we'll keep tabs on as they IPO here in the coming year. So definitely a good discussion piece there, man.
Yeah.
Hey,
so
before we move on to Dimitri's point, we tried to make the point that, hey, we need to have cordial discussions, and there was a mama joke thrown out. Guys, stay cordial in the chat now. We definitely are having some debates in the chat on not only Coinbase but kind of the Ethereum ecosystem. 1-2 saying, have a good day, lads. Thanks for tuning in. 1-2. It's good to see everybody in the chat, man. Thanks for stopping by today and making the chat lively, to say the least.
Yeah, absolutely. There's quite a bit of chatter going on in regards to Tesla pulled back 14%. That was some interesting stuff is happening there. Yeah.
Should have had the Tesla ticker on our thing.
I know, right?
Bitcoin. Damn.
Yeah, Mike is checking his short position right now, probably taking profits.
I
wish.
Yeah, 2 comments before we move on to the next discussion piece. It looks like we had 2 comments on this Coinbase situation. Paul says neutral at best. Investors don't care about crypto going up or down, just that Coinbase can extract fees. Ola saying the future will be high performance decentralized exchanges for the crypto markets. And talks about a little bit about EOSFinex being one of those decentralized exchanges. So it definitely is interesting to see, as Coinbase IPOs, the rise in DeFi and decentralized exchanges and the volumes on said exchanges. So obviously, I don't know how that plays into Coinbase's vision long term, but definitely decentralized exchanges are a competitor going forward. So what do we think, Dima? We hitting Bitcoin now? Or no, you got one more discussion piece.
Come on, man. You're taking out my discussion. You're crazy. All right. So, yeah, just a really quick discussion about stablecoins. So, specifically, actually, USDC that made some headlines here where, this basic platform, I don't know how to pronounce it, Center,
yep.
Center. Blacklisted an address holding USDC for the first time. It's like 100,000 that got blacklisted. So, basically, it's like, well, the funds are kind of frozen, right? So it's in kind of dispute area per se. So the discussion here is basically, well, also before I get into discussion, the Center is a platform that gives the ability for people to become the issuers of USDC. It's essentially powered by or backed by like Circle and Coinbase. It kind of raises this kind of a flag where it's like, well, we know that KYC must be done and AML must be done in order to comply with the regulators, especially if you're using USDC, since it's kind of like attached to the Coinbase. But there's like these ideas that are like loopholes that people are talking about, where it's like, well, you can technically like be KYC'd on an exchange like Coinbase, buy USDC, and then send that USDC to somebody who was not KYC'd multiple times, and then send it back to the person who is KYC'd to transfer USDC back into fiat, which is like, so you only have 2 points of somebody who's buying from the issuer and then selling it back to the issuer, but all in between is essentially not trackable. is not, KYC'd and so on. So and they're saying that it could be vulnerability basically, where there's could be some shady stuff going on. So this is the first kind of instance where we see this blacklisting, especially for USDC. And we know that speaking of USDC, we know how, like, what does it put DAI in this whole scope of things, right? Because DAI uses USDC, but it's like, well, kind of like, what the hell now? It's like, is this really like like the decentralized kind of way to provide a stable coin? Like, come on, guys. And like, what kind of pressure does it put overall on on these stable coins in general? Like, that just proves that, hey, listen, Tether is still going to be powerful, and therefore Tether still holds the huge market cap. But all these other stable coins that are regulated, I think they're gonna be hit hard with regulations, AML, in tracking, and so on. So it's gonna become like, where certain wallets can be frozen, or they can take away the funds. It's it's like completely opposite of like crypto that we believe in, or the kind of the people believe in our industry, where it's like, well, you have the keys, it's your keys in your wallet, it belongs to you. But it looks like with stable coins like USDC, that's definitely not the case. So like, what do you guys think of where we are as far as the stable coins go? Who wants to go first?
Yeah, I mean, it makes sense, right? Like, behind USDC is basically a bank, right? Most of these stable coins are buying what are called on the run bonds, in an effort to kind of build a business behind the issuing of these stable coins, where there really aren't any fees other than those that are transactional, or you have to use a traditional bank wire through the process at some point. So it makes sense, right? I think this is kind of similar to the Coinbase selling data to the U.S. Secret Service story. This is, everybody's kind of known this, right? It's kind of been the elephant in the room, and a lot of folks have utilized USDC or PAX or Tether because it's super convenient and it's accepted everywhere, and it's pegged to the dollar and pretty much doesn't change significantly. Tether has in the past, obviously, but PAX and USDC are pretty much worth $1. You can redeem them for $1 through their through their interfaces. So it's kind of, stable coins kind of grow parallel to crypto in a lot of ways. In my mind, I think we'll continue to see them grow, not because necessarily of crypto, but I think because of other folks using them for their digital utility around the world. So, it's not super surprising to me.
Yeah, the meme of full decentralization of money is definitely, as far as stablecoins go, is kind of funny. If you want access to USD, you're probably going to have the regulation follow, because that's the government that provides or at least controls and protects the underlying value of the USD in general. So definitely not hard to see for those people that knew what was going to happen. Obviously, if USDC is backed by that bank, then you're definitely having to go within those regulations, and it wasn't hard to see. Anyone that kind of was surprised by this is definitely living in some kind of alternate universe. So so as far as I think you talked about permission pseudonymity, when that issue, when you buy from an issuer Dima and you transfer to another person, isn't that USDC not still able to be traced to that person's address? Is that when we talk about anonymity, you're still seeing the money being passed between these accounts? It's not like it's completely anonymous, yeah?
Yeah, you can, but there's no KYC for that person, right? So it went to that wallet, but who holds that wallet? You don't know.
Absolutely.
That's a big issue. I think also just want to add the last thing in regards to this is, I wonder how that's going to impact, like, let's say countries that are looking to get a hold of USD exposure in distressed countries. So like, if they want to buy dollar, but the government itself is kind of restricting that to minimize the outflow of their currency. If that's ever gonna, kind of be enforced by some of these companies, where like the onboarding feature for USDC or like just stable coins is going to be very limited or non-existent in countries where they prohibit, they stop prohibiting that. and punishing people that maybe trying to do that, get exposure to stablecoin.
Awesome. You got anything else, Mike, before we move on to Bitcoin?
No, I think we can move on here.
Okay, awesome. Great discussions that you guys brought to the table there, man. That was an awesome discussion piece. If you guys in the comments have any stories that you'd like us to touch on and discuss in depth, that was the time to do it. So maybe next time, Layer1Live, you guys can drop some discussion pieces that you would like us to talk on. Otherwise, we'll hit Bitcoin, Ethereum, EOS, DeFi, and NFTs. We're sitting at about an hour and 23 minutes, so we'll relatively fly through some of these stories, and we'll continue to bring you guys the news. Let's do it.
Yeah, this one's pretty straightforward. The mining difficulty for Bitcoin has hit another all-time high. So, kind of some context and some repercussions of this, right? This is what China considers its rainy season. They've had more rain this year than they have since something like 2009 or 2010 as well, which when it comes to hydroelectric power means there's, basically a healthy mining environment that is going on in China, where we still see a majority of hash power existing. So all things are looking great for Bitcoin miners at the moment. Price is above 9K. It's been able to hold this range for a long time. Volatility is at an all-time low, which they love. You're not switching off and switching on machines. Things are great for Bitcoin miners essentially. So because of this, you see more and more machines coming online, which is going to necessarily over time increase the Bitcoin mining difficulty. It's about every 14 days that we see that difficulty adjustment happen, where it's going to go up, it's going to go down. Typically, rainy season ends at some point in August. It's pretty much spring, summer that exists. So we're coming towards the end of it, but maybe it lasts a little bit longer based on kind of the historically large rainy season that we've seen. It's pretty much the story. I mean, as you see that continue to go up, the thought has always been that your less profitable Bitcoin mining machines will be shut off and Bitcoin will be sold. But the article mentioned something interesting about how we haven't really seen that. I think that's probably because of the stability of the price and the cheap power that most folks are able to access over there. So, a lot of people before the halving speculated that by this point, most Antminer S9s, which is a bit of an older Bitcoin mining chip, would be shut off, and they just really haven't seen that yet. There's been some things that these miners can do to kind of make sure they're still profitable at this price. All things looking up for Bitcoin miners as long as this price stays strong, really for the next probably 4 to 8 weeks at least, I think.
Yeah, we were touching on some of the supply chain issues that COVID had on getting these mining rigs out. So I guess they said within that article that was getting solved too, and had been. I guess everything as far as the supply chain goes is completely solved at this moment. So definitely a boom for that area of the world.
Yeah, that's definitely interesting. Thinking about kind of just a comment about your piece, Mike. If the difficulty increases and there's more players that are looking to split the same pie, it becomes very competitive. I wonder, how many of the smaller miners, might be pushed out because of the higher difficulty and more, kind of players cutting the same pie of rewards that are less. But I agree, the fact that having Bitcoin in a range has definitely helped them for sure. To keep operating relatively okay. But my piece of news here is basically also related to mining. Fidelity International doubles stake in Bitcoin mining firm Hot 8. It's a company that's out of Canada. They're headquartered in, I believe, in Toronto. But they've increased their stake in basically this Bitcoin mining company, and now they own about 10.5% of that mining company. So Fidelity International, which is essentially a subsidiary of the Fidelity company, they're continuously looking to kind of invest in in mining sector because they doubled their exposure. And it's interesting to see how like the Hut 8 is actually listed on Toronto Exchange, and it's interesting to see how their basically stock price went down by a significant amount. They were trading in April 2018 at $3.35. Right now they're trading at 80 cents. So it's like there's pretty big dump there. But looks like Fidelity, is looking to pick up more shares and continue to invest in this company, which is good because I think in the end it's going to bring powering up more miners in North America is better for the kind of the West side to have more liquidity as far as Bitcoin goes, where we not necessarily have to rely on the East for freshly minted Bitcoin, that is mined. So I think overall, more miners on the West side will balance out the kind of the overall situation where we have a lot of miners in Asia, and there's probably some things that they're struggling with right now as far as the regulatory side goes, and kind of some of the instability that's going on there. So I think it's overall a good thing for North America to continue to have these companies that get in especially attention from Fidelity International, and continue to operate.
Yeah, it looks like the I don't know if it was the news that pumped it up or Fidelity itself buying the shares, but it looks like that's up to about $1.18 now. So,
Oh wow,
interesting setup there. They're listed on the Toronto Stock Exchange, so some access, I guess, for U.S. folks. Obviously, access for Canadian folks, but over 10% of a stake is pretty. It's pretty big. I mean, you're basically buying what, like 10x of a of Fidelity's mining company at this point, which is pretty awesome. So
yeah, absolutely, man. So I'm gonna hit Ethereum here. I'm gonna move the old column over as well. This is a pretty interesting piece of news as we see DeFi kind of continue to evolve. Aave is unveiling a credit delegation for trusted under collateralized loans, and I kind of want to have the discussion on reputation borrowing with you guys, and whether you think it's viable in decentralized finance. But essentially what's happening here is Aave is launching a feature on their platform where someone can go and borrow with basically zero collateral and use kind of reputation. I'll read from the article here a little bit. It says, with this new feature, any two parties can enter into a trusted agreement in which the depositor's capital can be borrowed by the counterparty. So it looks like interest rates, loan terms, and covenants are backed into an agreement. These are all set by the actual lender. So I have on the screen here the visual of what happens. I think they've got Karen and they've got Chad, and interesting names that they chose there. I just noticed that. But Karen deposits $1 million USDT. Or is that $1 million or 1,000? I can't really tell from this resolution, but let's just shoot with $1 million. She receives a USDT in return. She sets the parameters, makes the deposit. The CDV is created. She's setting this, I guess, percentage of APR and things like that. Chad signs it, and he gets access to this AUSDT and actually is able to receive a loan with zero collateral. Now, obviously the discussion around this is going to be the reputation lending and whether that's actually even viable on DeFi. I guess you're able to set your own rates as a borrower or as a lender, and then I guess obviously the benefit of having Aave's lending protocol is that you're able to access funds with zero collateral. Now, Dimitri, break this down for me and let me know if this is viable in a decentralized landscape. What happens, when someone defaults on a zero collateral loan in the traditional finance space, and how can that be kind of solved in the DeFi space, or can it be solved at all? What do you make of this?
Yeah, so there's an interesting setup in terms of traditional finance where you have bigger players like companies and funds back in FX. They have these things like prime services where it's like, well, you can borrow like $1 million, let's say, without any collateral, but it's based on obviously agreements and kind of set up there where you don't have to put up margin for the stuff that you're borrowing. But you know, that's with companies that are like you know, are huge, that have reputation, right? They have, you know, assets, they have a lot of things that, you know, in their field. They obviously have, you know, kind of corporate credit score, like, you know, that's you know, if that's impacted, then it's going to impact a lot of things. Because that was my first thing when I was, you know, talking to the guys who were working in prime section of Forex. They told me that, yeah, they actually don't need margin. They just borrow money without providing collateral. And I was like, what? And I was like, are you crazy? Like, how does that work? You know, I was so like mind blown. But they explained to me that, you know, I was like, well, what if they default? I was like, well, you know, they don't, because they're such a huge company, and, you know, they have enough assets, they're valued, their kind of like corporate credit score, you know, and all these things. Like, it's a very sophisticated type of setup for prime. It's obviously not towards retail, you know, at all. But with the DeFi, you know, it kind of gives me a sense of that, where it's like, okay, well, now you open this up, and then, you know, anybody can have this type of structure, right? So you can, you know, have this Karen, right, that basically takes this out, and then she, you know, kind of finds, like, or people find her and they're like, want to borrow funds, and then she has to make a decision how to structure the contract based on social score. That's like, how is that going to be determined? Doing these type of loans on an individual basis on the retail side is a very, very, very high risk. When the default happens, that, you know, they're just gonna, you know, default, right? Compared to like maybe companies that actually you know, could use this. Like, some companies could use this to efficient way. Like, this could be done as like a repo market. It could be like a bridge loan for certain players, where you don't have to deposit the collateral, but you just get the loan to get to unwind certain positions. So it does have like an interesting like pro side to it, but there's also the negative side, where it's like, well, it could be kind of gamed if somebody doesn't care about the social score, and they're looking just to take out the loan, and the next thing you know, they're using that loan to take out they use that loan to put as a collateral in a different platform and take out a loan there, you know. So it's like, there's, you know, things that can worry me, like, you know, yeah, like, if we think about like prime and sophisticated hedge fund entities that use this way in traditional finance, that provides a huge you know, value to them, and that system works very efficiently. But with the DeFi side, it's a very big experiment, because you never know what kind of players you're going to get. You know, it's like, it's going to be it's going to be interesting to see how that's going to play out. I'm overall like kind of worried every time we see something like this come out.
Yeah, Mike, before Mike gets to this, it is fair to point out that one of your concerns is definitely managed by the team, as far as they're actually going to choose who's using this platform. So I think from the actual article, it says, while there's definitely a large degree of trust associated here, we can assume that the first set of credit delegations will be between parties with a strong social reputation. So they're actually going to be choosing who's using this platform, I guess, at first, and that goes along with their governance token, yada, yada, yada. So Mike, I just wanted to point that out before you talk, but what do you think about this like lower collateral and under collateralized loans?
Yeah, let me ask you this. I haven't looked into Aave enough, but there's not KYC, I'm guessing, right? Because it's DeFi. There's this sort of like social reputation.
Yeah, but I think what's happening here is back to my like statement that I just made, they're going to be actually choosing who is using. Yeah, at first. I mean, this goes down the rabbit hole of under collateralized loans. I think we put in the lads community chat earlier another platform called Zero Collateral, and it got torn to shreds because I think it was a no KYC kind of like lending and borrowing, which, yeah. I think,
but they also have only 2,200 in DAI of supply to lend. It's like, you know, nobody's lending. Nobody's gonna lend on a platform that's called Zero Collateral, bro. Like, get out of here, you know?
Yeah, I think the future. I think the future will be zero knowledge reputations, where someone can not know the actual reputation or not know the person, but know the reputation scores and things like that. But to answer your question, I think at first, at least, it's going to be KYC based. As they roll out the platform.
Right. Yeah, that makes sense. I mean, they don't want it to blow up immediately, I guess. Seems to be the thought there. Yeah, I mean, typically if you were to see, like, you don't usually see peer-to-peer loans in the traditional world. I mean, there's a giant market that this, especially in Asia, that, you know, is a multi-trillion dollar, you know, kind of hybrid finance market of these peer-to-peer loans for even your small to medium-sized businesses who just don't have access to capital because they're already too over leveraged. So they kind of go out and are able to get additional loans on crazy interest rates, and they bundle it all together, and it just becomes this massive debt bubble for the company. But like, if you were to go out and get a loan to buy a house or to buy a car or anything like this, you're doing it with a bank. And if you default on that car loan, then the bank's going to take your car, and the bank's got it all figured out that, you know, they're going to take so much interest from you, and they know, you know, okay, of all these loans we give, a certain percentage default, and, you know, our entire system is kind of built on data and all this, and it makes sense. Where this is obviously brand new and is super experimental. So this isn't normal in the traditional space, and a lot of times, you know, it's usually with, like Dimitri said, very trusted institutions. To me, what continues to happen with DeFi, this as an example, is just people pushing the boundaries of how degen they can get, right? Like, okay, well, it started and I had to put up 150% of collateral, which is like, well, what's the point, right? Why am I going to put up $150 worth of USDC to pull out $100 worth of DAI, right? It doesn't really make a ton of sense. But all of the various DeFi traders have kind of figured out different ways to scheme DeFi and pull out a ton of yield while, you know, earning money on their collateral that they're lending, or earning money on, you know, even the assets that they're borrowing. That it's just kind of become this giant scheme. And I think we're going to continue to see more and more DeFi projects come out and say, well, you know, hey, now you don't need collateral, or hey, you don't need reputation, or, you know, whatever it is, right? If myself as a new project can eliminate some hurdle, then theoretically I should be able to steal all of the usage that's out there. And if I can retain it, then that's big for me. I can go out and raise more money. It's going to pump my token, of which, you know, I have the majority of the tokens as the team. So it's just, you know, it's hard for me not to look at most of DeFi with kind of the cynical speculator, you know, lens, if you will. Because I don't really think that, like, people in Indonesia or, you know, Taiwan or whatever are like, oh my God, thank God Aave's out, right? Now I can just like borrow all this money to go and buy milk or whatever, you know. Like, it's just, it's very much kind of this speculator's paradise of sorts happening, I think.
Which increases the leverage overall of that sector. Yeah, and, you know, my question is, when credit default swaps on DeFi is what I want to know.
You're gonna be there.
Yeah,
you'll be the first one in line.
Yeah, man.
Good luck proving that the credit has defaulted in DeFi as well.
That's true.
Yeah, I mean, there has to be a solid space where you can move forward, but also like stay within regulation, right? Like, I think ICOs are a great example of this. Like, certainly there's a ton to be worked out as far as regulation, but the idea itself isn't necessarily like not viable. So, but people are going to push the boundaries, and there's going to be situations where it doesn't work out. But that can't stop people from innovating on certain things that would make the world better, you know? So definitely it's stealing a little bit of business from traditional finance, but you know, they have to stay within the realm. What's up?
Yeah, no, I mean, it's like, I think that's what people are selling DeFi as, is it's like, you know, kind of this, like, oh, wouldn't it be like, I saw something that was like, oh, it would be so groundbreaking if like some portion of the loans that banks are making are like collateralized with DeFi assets. And it's like, what? It's just so far from reality. And I get it, right? Like, crypto has been a speculator's paradise. If you can sell this to people and people buy it, I mean, you know, good for you. But like, it's just, you don't even have basic KYC and AML laws, and that's a giant issue for a lot of these DeFi products when it comes to regulatory compliance. So to think that like banks would ever touch this in its current form is bonkers to me.
Yeah.
I guess the interesting part is that when you have companies that do deal with banks and also deal in DeFi, like Celsius, right? So something like that, which is like a third party that gets transitioned. But I agree, like, I mean, if you look at the traditional finance and like talking the whole game of like them really having an impact on a big, on the market share, it's kind of hard to,
I mean, they're just barely getting into Bitcoin. Like, let's
Right.
slow our roll. So I understand what you mean. I think they have targeted the right kind of people that would be using their product, which I think I can read from the article again. These delegators would be, I guess, in the beginning. So we're at the beginning. These delegators would be crypto funds, while borrowers are going to be market makers and exchanges. So these are targeting, funds and crypto exchanges and market makers that are already using and already within the space. And I think trying this out with those people and finding a product market fit there, that's more viable than saying, okay, this is going to be a bridge to traditional finance, which I don't even know if that's their goal, but certainly it wouldn't be viable in this point or even in the near future. But if they can bridge, market makers with crypto funds and exchanges and, go down that rabbit hole, I see where you're talking. I definitely get where you're coming from, though, for sure. I guess that's pretty much it with Ethereum. We'll move on to EOS here. I'm going to move the column over. We've got some people in the chat that I want to shout out. Silver Crypto is in the chat saying Link is on fire. Manuel is saying silver's pumping, so we got a little bit of a situation going on in the chat there. It looks like Adriana's in the chat saying great DeFi chat, and we appreciate you stopping by, Adriana, from Cypherglass. So as we move into EOS here, we are going to fly through this portion as well as DeFi and NFTs. I think we're at an hour and 45 minutes. So quick pieces of news for EOS that we'll touch on. Upland is a NFT game, kind of in the same realm of maybe a Decentraland and CryptoVoxels if the world wasn't actually created. So you almost have like a 2D world or a map version where you can buy and sell land and do things like that. But the real story here is this NFT project here on EOS is launching a contributor network. So just using this this article here, it says UCN will be a hand-selected network. It will involve an application and vetting process to ensure certain quality requirements. So basically what they're doing here is vetting potential players and rewarding and subsidizing those players that are most active on the platform. So they're actually taking the people who are most active in their game and using subsidized rewards to incentivize them to maybe share the game more, maybe play the game more. But that's just a conversation there on kind of games incentivizing activity, and that's the first time I've seen a project actually go out and say, hey, we're vetting our users and trying to find like a network of those and then calling them broadcasters, which is an interesting approach to take. But definitely subsidizing activity in the game is interesting. Upland itself, we'll see the viability of a metaverse that isn't VR or isn't even 2D or where you can hop in. It's again more of a map. So, but they're building, and I like to see new NFT projects kind of bump up not only on Ethereum but the EOS network. EOS Finex, this is just a very quick piece of news. It looks like the much touted decentralized exchange that was going to launch on EOS way back in the day. I remember they initially launched and didn't get very good feedback. So it looks like they're moving into another beta stage, and they're asking for beta testers. And it looks like they're looking to do mainnet here in Q3 or Q4. So the tweet there is in the description that you could find if you're looking to access EOS Finex. You might be a beta tester for their platform. I'll pull it up here and look at the tweet. But that's essentially all the news we have as far as EOS Finex goes, and that project. So if you reach out to them on Twitter, I'm certainly they'll probably reach back and see if you can be a user possibly of that mainnet or beta that's rolling into mainnet. So that's pretty much it than what I got. I think we had some EOS Nation and liquid oracles or liquid apps kind of showing that they are putting some money behind this Reddit challenge that we talked about earlier in the episode. What do you got, Dima?
Yeah, so it's interesting to see, like, Reddit kind of came out and saying, hey, listen, we gotta, what propositions you guys have solving this ETH like scaling issue, if we're gonna get set up here to onboard our users with this new reputation token and so on. So basically, EOS Nation is matching the liquid apps. As far as the bounty donation goes, they did 1 million DApp tokens for the winner. What they're trying to do, EOS is basically hopping in on this and trying to provide a solution where using the the liquid link to kind of as a scaling tool for Reddit to be able to pull this off, which involves obviously EOS. So it's just the race for the bounty is on, where they're trying to attract developers to be able to set this up and essentially complete the bounty for Reddit. Which Reddit bounties actually doesn't pay anything. It's just like straight up says, hey, listen, we're just trying to collect like information and resources, and just so you know, like we are, if you like post something that's like really good, we might just take it. It's like that's just how it's going to be. But it's interesting to see how the protocols like EOS are competing, trying to answer and make sure that they're stimulating their developers and community by providing some kind of prizes. So they're the ones that trying to secure this essentially scaling issue or bounty that Reddit is trying to do. Because if you have obviously EOS that comes out to be providing this scaling solution for Reddit that has millions and millions of users, then that should be a pretty good win. So
yeah, I did a quick calculation. It looks like with the Liquid Apps team, who's also donating 1 million, not donating, but they're putting it up as a bounty. So it's 2 million DApp tokens total. That's about 35K for whichever developer kind of can answer the call there. I think Liquid Apps is also based on that story, and let me see if I can pull that up. They're also doing a donation to, or again, a bounty for connecting Link. So it looks like they're trying to connect Liquid Oracles, which provides data feeds for EOS to the Link data feed. So it says Liquid Oracles and Chainlink are better together. 350K DApp bounties on the line. So another kind of developer bounty there.
Yeah, it's I think it's until the July 31st, end of this month, is kind of deadline there.
You got anything there, Mike?
No. I mean, it makes sense. It's a giant, giant problem that needs solved, and if you can solve it for Reddit, you could probably end up with some funding from Reddit or something of the like too. So it makes sense.
Cool. So the next topic, if we're ready to get into some DeFi. DeFi, I mean, we've obviously already talked so much about it, but the only piece of news that we got here in the DeFi section is basically talking about how Uniswap it's got 10 times more assets listed than the closest competitor on their platform, which kind of reminds me, of like back in the day when ICOs were around. You had like platforms like Bittrex or like some others that just list like any coin, whatever the coin is, and they'll list so many coins. They'll be like it's unreal. But then what happens at the end, obviously they start delisting because the volume dies, and they actually got into like some of the negative side of things in terms of just having so many listed and then delisting them. People were getting mad. There was some bad PR, like it was just like it was a shit show. But so with this Uniswap, I think they're really taking their chances there, by really supporting so many. I mean, yeah, it is kind of unique for them to do that compared to competitors, and they're trying to capitalize on the DeFi, I think, hype right now. But I don't think all of these like assets are going to obviously survive. There's going to be probably some kind of unlisting that's going to happen later on, which eventually is going to trickle down into some bad PR for Uniswap, and it's kind of like, well, I see what they're trying to do, but we've seen that happen multiple times in our space. For example, with ICOs, like I explained, with exchanges that would list like any kinds of ICOs. So just a little piece of news there, just to kind of my opinion on the Uniswap, and how they're basically have the most assets listed.
Yeah, that's definitely a platform that has taken over. At least I think Roll uses that specific platform as far as like them getting listed, and those are where all those personal tokens are listed. Certainly with like hundreds of dollars of volume, or like less than $1,000 worth of volume. So it's a good point that you make there. It definitely offers a value for these tokens though, for smaller communities and different assets that need to have a place to be traded, right? Like you can't just not have a place to trade and offer, market making and things like that for the smaller tokens. And unless you go to a Bittrex or one of these large exchanges, it would put a cap on how fast maybe a community can grow that's using these smaller illiquid tokens. So
yeah, I get that. I mean, it's like, do we need like 50 different wrap BTC contracts? Like, come on, like really, like, come on, guys.
yeah, I mean the free market will decide, right? So
Yeah.
we will see that go forward. So I've got NFTs really quick. This is a really cool story, and along with kind of the credit delegation that Aave was doing, this is just another discussion piece other than the actual physical story, right? So Niftex, this I'm guessing NFT exchange, is offering fractional ownership of NFTs, and this is something. Fractional ownership is something we've talked about with like real estate, and the idea that blockchain can offer you to have these infinitesimal amounts of like really cool estates or really just valuable items, right? I think NFT art has been thrown in the ring where you can own 0.0001% of the Mona Lisa or something like that. But it's funny to see this actually finally come to fruition. So I've got this article here. It looks like it's starting with some Axie items, but basically what you have here is now the ability through in an exchange format to buy and sell NFTs. And this is important for a couple reasons, and they've kind of laid out some of them here. But basically what you have right now is when you want to trade NFTs, you're basically just trading the single asset, right? Like while it's unique, it offers some problems when you're trying to get data on an NFT, get the actual value of an NFT. But now, whenever anybody's trading one of these fractional ownerships, you can get a live feed of maybe the value of the item that you hold, which didn't exist before. You basically were just trading items on OpenSea. There's definitely a lot of other benefits that you get when you essentially quote unquote shard these items. I guess that's what they're calling. You get the ability to own items that you wouldn't necessarily be able to own. Another really cool part of this article, they talk about the buyback mechanism. So if I can get into the second article here, you essentially have I guess when you fractional ownership the NFT, you essentially have the ability to set a percentage that you want to sell to the community. So let's say I own one parcel, I can choose to sell 10% to the community. There essentially is an auction for that, which then is able to be traded on this Niftex exchange, giving kind of a live price feed of what that, if you extrapolate it out to 100% of the ownership, what the item's actually worth in real time, if there's liquidity and all these things. But you're able to then I guess the original owner is then able to buy back these tokens and set a price and decide whether and I guess the people with fractional ownership can decide whether to sell back that to the original owner. I guess there's obviously some advantages to having a full NFT in full ownership of the item, like, for example, when you need to trade the item and sell in full and things like that. So I wonder what you guys think of this fractional ownership of NFTs. I think it makes sense that it came into an arena where, unlike real estate has all these barriers and all these different regulations surrounding them, fractional ownership makes sense in already kind of digital item and digital item kind of universe. What do you guys make of fractional ownership of NFTs?
I think it makes sense. Fractional ownership of anything is kind of blooming. I know Robinhood is working on that. They've kind of been a big proponent of that because if you want to, buy a share of Tesla, it's pretty expensive at this point for most folks. Maybe they only want $17 worth. So now they can buy 1/100th of it kind of thing. So yeah, I mean, it makes sense. It's definitely beneficial. I mean, if you want to own the number one crypto kitty, but it's $30,000. Now you can own 1/100 of it for a lot cheaper or whatnot. So makes sense. I think it's a good addition kind of to that marketplace, so that maybe you see more transactions happening overall.
I think. Go ahead,
Yeah,
Dean.
I agree. It's just the only thing is just like from my side, I'm concerned about is just that do we really have enough of NFT pieces that require fractional ownership at this point? Um, if the answer is yes, then yeah, that's a very good idea. But if the answer is, well, we have just a couple NFTs like that are very expensive, let's say like Genesis, like some like CryptoKitty or like whatever, right? If there's only, you can count on one hand how many there are, like they're very expensive. I mean, like I don't know how much of that is really gonna fly. But the more we have of big expensive things that will need to be cut up, uh, the more it will be valuable. But I think that might be just kind of front running that idea. So knowing that, okay, later on we're going to have NFTs, they're going to be very expensive, that we will need to cut up and give fractional ownership. So they're kind of doing it ahead of time. That's kind of my opinion on it.
Yeah, they're definitely they definitely expect this to be a bigger market. Certainly, I think the NFT space is definitely vibrant enough to do something like this up to this point. Like, there's no cap that they need to hit, like have 100 or anything like that. If it's one item at first and it just blooms from there, then that's what they're gonna do. The coolest thing about this, I think, is the ability to actually trade NFTs and not have to have full ownership of the item. I think having these markets for just back and forth, ownership of just like smaller, like you're saying, fractional ownership, I just think it provides a little bit more fun for the NFT space, where you can go to a market and see like the tickers for this different items, where you're able to just buy certain assets, as opposed to, oh, I need to go onto OpenSea, I need to buy the actual asset and things like that. And then the live value of the item is something that we're just missing. Basically, if I'm looking for the live value of my NFT right now, I got to look at maybe one that was recently sold. And then there's just like so much different things that go along with that, with trying to value these NFT assets. Something like a price feed where someone's buying fractional portions. Now, you need liquidity, like you said. But if you do have some liquidity, you can see like live value of some of these items. So it's a good point. I think this is something that hopefully gets built out over time, but a good add to the ecosystem for sure.
Yeah, for sure. So I've got the last point here under NFTs and also the last story for the episode here. So we talked a handful of weeks ago about Ubisoft and some of the things they were doing with blockchain and crypto. They've officially inked a deal with an RPG game, or MMORPG game, called Nine Chronicles, which is from the Planetarium team. It's interesting. You've seen a handful of different MMORPGs which inevitably have been shut off. So people have kind of put all this work in, and then the game creators have said, well, we're not going to really do anything with this anymore. Maybe they want to push people to their newest MMORPG, and the game gets shut off with some pretty, there's some info out there on Twitter and elsewhere. You can kind of see everybody getting ready for that shut off moment, and it's kind of hilarious. But in this decentralized arena, that would not be possible. It would kind of continue forever. So Ubisoft has inked this deal with these folks. It's not the first time they've worked with Planetarium. Planetarium was a part of Ubisoft's Entrepreneurs Lab, which is an accelerator program, and I think was the piece that we were talking about a handful of weeks ago. So Ubisoft is, really taking some big strides into blockchain gaming. I mean, they're obviously one of the largest game studios out there. So to see that really kind of verifies and even quantifies the potential growth that we could see in blockchain gaming. So congrats to the Planetarium folks. Not sure when Nine Chronicles launches, but anything, MMORPG is always fun. And I think inevitably kind of a, something that could bloom into just a giant ecosystem, a giant game that's used by a ton of people. So we shall see. We'll definitely keep you guys posted on all the things that Ubisoft is doing in the blockchain gaming space.
Yeah, it's good to see some of those starter labs actually get picked up after the fact. I think Axie was part of one of those starter labs too. So we'll see, how they do going forward. That's pretty much it. That's what we got for the episode today. It was, let me check the final total. We're sitting at 2 hours exactly. So we will kind of wrap up here. We appreciate everybody that commented along. We had a hell of a chat room today. Ola Art saying when Layer 1 NFT. So we'll see about that one too. Renee's chatting a little bit about Texas and low electricity kind of driving mining to happen in that state. Yeah, definitely a ton of more topics that we could cover today. But that is pretty much it. We have a lot of different episodes that are coming up here in the coming week. Dima, did you want to shill a little bit?
I just wanted to mention something before we wrap up. Tomorrow, 5 p.m. Eastern, Dimitri's desk. We're going to cover alts, obviously, recap some of the things we have talked about in Friday's episode. So join me and let's talk these speculative markets. I got the speculation juice for all of you.
Absolutely. And if you guys want to contact us and maybe join the Layer 1 community, if you haven't already, the description has the link for the Telegram channel. Then you can contact an admin or we'll be in that channel with you and we can get you access to our private community. So definitely super excited as we go forward. Thank you again, guys, for following along the entire time. Leave a like if you haven't already. Otherwise, that's it for us. Bam.